Direct. And Julia, I want to bring you into the conversation and get your view on markets. It's a big week ahead, I should say, here at home locally as well. A bunch of production reports out. We're a couple of weeks now out of reporting season as well. Is this weakness expected to continue in your view? Because we've had quite a few weeks of strength now.
I think the markets have been pretty resilient here in the face of the escalating trade war between the US and China. And look, we'll be watching the trade wars, but this week in particular, we will see a ramp up of US reporting season. And that's going to be a key driver. Here domestically, of course, we get employment numbers out on Thursday, and we'll be watching that. But as you mentioned, Ingrid, confession season is now pretty much at a close, and we're now waiting for that full year earnings season to kick off in a couple of weeks in August. Today, we were watching the China numbers, and look, second quarter GDP was important. It came in at 6.7% as expected. But I think the thing that disappointed was industrial production, which came in at 6% compared to expectations of 6.5%. And of course, if you have a look at quarterly GDP, that's a pretty slow figure, and industrial production gives us more of an insight into the output of China near term. And look, that was an impact on the material sector, it was an impact on commodity-based trades, and it was an impact on the Aussie dollar today. We were also watching potential takeovers, and that helped lifted a few stocks. So it was interesting to see Ausdrill doing well. There's been some speculation that after a sale, speculation around a sale of shares by its founder, that perhaps it could be a takeover target. And G8 Education, of course, is the other one that's been in the news. And then Ingham's as well. They're looking to sell their feed business, and the share's performing quite well on the market today. So look, it was an interesting market, still some slower volumes given that it was a Monday, but altogether I think it's going to be US earnings season that dominates short term.
We have got earnings season kicking off in a couple of weeks' time, some production numbers coming out this week, and I want to just briefly touch on Whitehaven with you, Julia, because obviously today flagging a rise in earnings expectations, certainly coal sales helping boost this. What's your take on Whitehaven today? And certainly the stock was up, was weaker at the end of the session, 2.4% weaker. So what does this tell you about costs going forward for the business? Because that is what we're watching, cost guidance.
Look, over the last quarters, we have seen costs rising for Whitehaven Coal, but at the same time, we've seen thermal coal pricing at a 7-year high at the moment. So while costs are rising, we've seen the underlying asset price, commodity price also rising. And look, this has been a strong performer in our market. The shares are up 100% over the last 52 weeks. We knew that the fourth quarter production numbers were going to be impacted by the setbacks at Narrabri, yet despite that, we have seen flat production for the year. And look, the fourth quarter numbers, they were a little bit disappointing. We did see a 13% slide on output, but I think the market was expecting to see a more than 19% slide here. So look, I think this is a pretty good result. And initially the shares actually rose. It was only until we started to get the numbers out from China, and especially the industrial production numbers, that we saw the shares start taking a step back. And I think we saw a lot of stocks in that sort of category in the material sector. So by the end of the session, it was down 2%, but it has been a phenomenal ride. And the shares initially in the morning did rise on the back of this quarterly production number.
Speaking of, somewhat retail, I guess, footwear retailer Accent Group, a shocker for this one today. It was down 15% at one point. I think it's down about 12% here at the close. But what's your take? I mean, in terms of heavy volumes this morning, it's all about money coming out of escrow. Talk us through what's going on with this one.
So the only announcement that's come through with Accent shares is that 37 million shares are to come out of escrow on the 4th of August. So that represents around about 7% of the company. And this, of course, is related to the Hype DC acquisition that they did a couple of years ago. So if we have a look at this particular acquisition and the shares that will come out of escrow, it does mean that there's going to be speculation in terms of what the old Hype DC owners will do with these shares. So they already have around about a 5% stake in the company. These shares coming out of escrow will increase their holding to around about 12%. That makes it them the biggest shareholder after Brett Bundy, who has around about an 18% holding. So look, when you do see shares being released, and if there is speculation that the owners might sell to, crystallize their value in terms of the business that they have, not as much to do with anymore, then it does lead to some weakness. So look, I suspect that this will be a cloud over Accent shares. In terms of the underlying business, though, some strong brands there. As you mentioned, it's a shoe business. It's all about sneakers. And as we see the casualization of the workforce, I guess we're wearing more sneakers. And this is all about, I think, Asian expansion of some of its platypus as well as Hype DC brands.